Hello and welcome to Leaders of Tomorrow, India's largest platform for entrepreneurs. If you've got any questions related to any aspect of your business, we've got it covered right here on the show. I'm Sananda Jayaseelan tonight, taking forward our in depth conversations around personal finance. What, where, and why should you be looking at different asset classes? What are those asset classes when it comes to investing and saving your money? All of that being decoded on this weekly segment tonight. I'm in conversation with Naveen Mathur, Director Commodities and Currencies at Anand Rathi. Naveen, good having you back with us here on Leaders of Tomorrow. We had this great conversation talking really about why commodities, why entrepreneurs should look at commodities, and then a little bit specific as far as gold was concerned, your outlook on gold, what one should keep in mind on gold, whether it's ETFs, whether it is physical, gold jewelry, etc. Today, we are going to be talking oil. What should an entrepreneur know as an investment strategy as far as oil is concerned, and also the big picture really from the expert on commodities as far as what is likely to happen on oil in the short term, in the long run. So Naveen, maybe we could start there and get your picture. Most analysts and experts are expecting a bull run for commodities on whole, and then we'll come to oil. What is your expectation?
Yeah, thank you very much, Sunanda, for calling me again on this show. It was my pleasure to discuss with you on the gold or silver, the last episode. A very pertinent question which you have asked, Sunanda. See, the commodities, as I mentioned in the last episode also, the commodities have seen a bull run, be it the bullion, be it the industrial commodities, and be it the crude too, which we will discuss today in detail. All these commodities which we have spoken about have been on the multi-years high. In case of bullion, we saw all-time highs in the dollar terms for gold, and same case with silver too. Means rather than saying too much on those two commodities, which we anyway have discussed, I will concentrate more on the industrial metals and oil, as you rightly mentioned, for this particular episode. Now, just a quick run through of what has happened in the last year, 2020, and what to expect for the industrial metals going forward. Now, yes, the last year has been one of the kind of the years which I think at least few generations have not seen. So, the entire world was locked down. We didn't have too much of activities, industrial activities happening, and at the same time, the industrial metals largely comes in from the Latin America. There too, because of the pandemic, there were the closures of mines, etc. So, in
Sure.
spite of that, the manufacturing sector was not running to the full throttle, and that's just not
Hmm.
restricted to one or two countries. That is it is actually the global phenomena the last year. So the demand per se didn't do well. Means we had a absolutely negligible demand in the months of March or April 2020. And when the easing of the lockdown across the globe started coming in, you
Sure.
saw the China, the developing countries, even the developed world in the EU, like Germany and all, they started opening their manufacturing outlets. Now, with
Yeah.
that, the demand went up, and therefore the prices also are touching all-time kind of high. Say, for example, copper, if I will say so, means we have
Yeah.
seen every single week the prices moving on the upside. So more or less,
Sure.
we are on the industrial metal side. We are seeing an uptrend to continue up till and unless there
Okay.
is nothing negative coming out in terms of this
Sure.
pandemic, the second wave or so. The liquidity, the
Sure.
low interest rates, all that would be positive for the industrial metals for
Sure.
2021.
All right. So then let's talk specific to oil. And a couple of things that are happening as we speak in terms of what really is going on around the world, particularly on oil. My first question, and let's talk really about the news coming out of the US, particularly the impact out of Texas. Is that in the short term expected to have both the production as well as a price impact in terms of oil? What comments can you give our viewers? What should they be aware of, really?
Let me go back to April 2020, when
Mm,
actually we saw the negative prices of crude oil. April 21st was the
mm,
day when the expiry was happening in the NYMEX, and the prices did touched approximately on the 20th trading session, on the 20th April, the negative of $38 or so. Now, having said that, the market stabilized, means that was because of the supply side, that the production was anyway continuing, and the demand stopped, means all the tankers, everything got, the travel, the airline industry, nobody was traveling, so the demand per se for the crude oil was nil, so to say, and the supply was continuing. So once you have a larger supply, you have
mm,
less of the demand or negligible demand, the thing would be negative only. So one is that particular reason which I would definitely put across. The other one was that since there was no demand, so the inventories or the stocks, as we say in the US inventories, all was stuffed with crude, and we are still facing the supply coming in. So, with no
sure.
demand, you have the full storage capacities of crude oil, and still the supply is continuing. So, once in a kind of a lifetime experience of seeing a negative price of crude. So one was that
Okay.
reason. And from there, if I say the journey started and steadily for the crude, both for the Indian and the international markets, we
Sure.
stabilized at around $30 to $40 level, Sunanda, for quite a
Sure.
bit for the last year. Now,
Sure.
yes, the anticipation of the stimulus by the new administration in the US, the Texas impact, and the tensions between US, Iran, including the
Mm,
Saudi production cut, has
mm,
took the prices from say $40, $42 levels to approximately
sure.
68, $69 level too. So presently, we are kind of in a range of around 60 to $65 levels for both WTI and the Brent
Sure.
crude. And the kind of a jump which we have seen, it was largely because of the Texas freeze, which knocked off 16
Yeah.
refineries production, and Oklahoma also. Now, this particular place has too many rigs from where the shale or the crude oil production happens in the US. So I think overall trend with the positive stimulus from the new administration, the supply constraint maybe on the OPEC or the Saudi, I mean Saudi Arabia, or maybe the conflict between US and Iran, everything took the prices to the next level of 65, $68. And I
Sure.
think with positivity building around with respect to the pandemic, I would say that the vaccines are working, so the economies are opening up. And I think we don't feel, in spite of these impacts, we don't feel as of now to crude to go beyond $75. But if you really
Okay.
ask me in the near to short term, I would say we would see approximately $60 kind of consolidation for the WTI, and the Brent
Okay.
can be at a range of around, I would say, 65 to $70.
Okay. Since you're talking about the US, I also want to talk about the stimulus package that we're expecting from the new US president. What impact is that likely to have on prices, if any?
I think, Sunanda, the $1.9 trillion stimulus package has already been passed by the House of
Hmm.
Representatives in the US.
Hmm.
If so, this is get through US Senate. I think it would be a major boost. Means the US definitely is still going under the kind of winters like Texas. They are talking about multi-year kind of snowfalls, which they have seen, freezing temperatures. So I think this would give kind of a psychological, I would say, impact to the citizens in the US that the government is
Sure.
interested to get back the economy on track, and at the same time it will also help people who are kind of struggling, maybe because of the harsh winters, or also because of the unemployment
Sure.
those pandemic related unemployment losses. So means I think the job losses. So I think
Okay.
seems to be a good start. If it gets through, I
Hmm.
feel then the safety level on the crude, both for the WTI
Hmm.
and benchmark, the WTI and the benchmark Brent would not be a difficult thing to surpass. So we may even touch
Okay.
$75 around that particular levels.
I'm going to slip into a break on that note, but much more on the other side. Just stay tuned. Welcome back. You're with us here in Leaders of Tomorrow. And tonight, I'm continuing to bring you a series of conversations that we're doing once a week, bringing in experts across the field of finance, experts who will tell you how to manage your wealth, how to hold it right, how to invest it right. And today, I'm speaking with Naveen Mathur. He's the Director of Commodity and Currencies at Anand Rathi. On the other end of the spectrum, I want to talk about OPEC and one of the largest members there, Saudi Arabia. Saudi, looking at a production cut really when it comes to oil. How much of that 60 to $75 that we've been talking about in terms of that wide price range, then in the short to mid-term, do you think is going to get impacted perhaps because of this?
No, I don't think so, Sunanda, as of now,
Okay.
because in 2020, OPEC Plus has stepped up to ease the rout by announcing an output cut of 9.7 million barrels per day from May
Yeah.
1st. So we have around 2 months going forward. The figure is known to
Hmm.
all of us that the OPEC Plus has decided for 9.7 million barrels cut, which I think would have been discounted and into the prices, which we are talking about at around 67, 68. So all that impact definitely had actually been, or the news has an impact already been there onto the prices today, apart from the other reasons, means the stimulus and the harsh winters. I think the OPEC output averaged a record low of, and this is something important, of 25.86 million barrels per day in 2020, which is
Sure.
14% less than 2019, which
Sure.
was at around 30 million barrels a day. So, since it's a kind of a neutral stuff for developing in the developed world, somebody is still in the lockdown. The Eurozone
Yeah.
countries are still, say for the UK and all, they're still doing the second round of lockdown. So, I think overall neutral to what has happened, but then 60 to 70 would be something to watch out for in the near term for the crude oil prices.
Okay. Speaking of near term, we're coming up on the next round of earnings. What are you expecting? What are you watching out for someone watching today's interview? What would you want them to keep their eyes out on, when we're looking at earnings from some of India's largest players?
I think the Indian story has been kind of its own in this entire pandemic. Sunanda, we must
Yeah.
appreciate the initiatives taken by the government sincerely in terms of a complete lockdown when everybody was talking about that it has to be a kind of a phased. I think we have been saved in spite of being high density population. Means there are lot many things which actually would have been negative for India the way the pandemic was progressing. And the kind of a V-shaped recovery we have seen is definitely going to continue. Now, let it be the government side, the fiscal measures taken during this particular hardships. The budget, once again, has been a remarkable budget, a history made budget. And I think the RBI is pretty positive towards the monetary, accommodative monetary policy. Now, with that, the positives are all there for the economy to continue its upward trajectory. The
Sure.
only thing which is negative is maybe the rupee volatility or the kind of a demand which can be muted because the implementation of the infrastructure projects would take some time. So the actual usage may not be that high in India. But
Yeah.
I think the overall, if you're asking me the entire economies and all, the companies per se, overall
Okay.
seems to be that India is presenting definitely a very robust kind of a situation even going forward. And the budget and the accommodative policy would help people to spend more, and therefore the earnings looks like to be pretty much good in spite of what we have seen in the last year 2020.
So then, to cap off today's conversation, Naveen, I do want to talk about hedging as a strategy, in the commodities market. For someone watching the interview, what's your advice about how we should approach that?
I think, as I mentioned the last time too, means in times of
Mm.
the commodity price volatility, and crude being one of them, and since we are talking largely on crude, Sunanda, I would say that the people definitely should look into for hedging strategies to be put in place.
Sure.
I think the
Sure.
going forward scenario would not be real normal. We would be living in the world which is more dynamic, would be changing in a split of second, and therefore it is pretty wise for people who use crude oil as their raw material to hedge
Mm.
onto the exchange platforms. I know that a lot
Sure.
many the oil refiners are doing it on the international markets because of the liquidity and other constraints which we have it in India, particularly on the MCX, like the two nearby contracts are only liquid, and these positions are for a little longer duration of time. So I think the liquidity
Yeah.
concerns definitely impact the small people who are looking forward, the small enterprises, the SMEs, the small corporates who still want to do it in India, but because of the lack of liquidity, they do not do it. Mind you, that we have seen minus 40 to plus 60 in, say, about a 7 8 month span of time. So, kind of a volatility of $100 per barrel in the 7 8 months time frame can make or break your margin. So, I would recommend definitely that if possible, all the corporate or all the people who have an exposure to crude oil must hedge depending upon whether they can do it in India with respect to the liquidity or whether they want to do it in the international markets like NYMEX on ICE. But I think it's a foremost thing to look forward to, specifically for people like airline industries. It means I think the 60% of their cost comes in from crude. And I think all those airlines which don't do, and the crude oil being volatile, may impact anyway on the stressed balance sheet situations for
Sure.
them even today. So I think it makes sense to do it definitely because of being the volatility which can witnessed in the crude oil in the near term and even in the longer term, I think.
Naveen, thank you so much for your time here on the Leaders of Tomorrow.
Thank you very much, Sunanda.
For tonight, we've run out of time, but if you have any feedback for us, our contact details is up on your screens as we speak. Do let us know. Thanks for watching. Have a good night.